What's going on out there, good people? This is your boy Look Around with LMD Trading, where I am living my dream trading. And you know what time it is. We are getting this review out of the way early today. Today it is 1:12 here on the East Coast, so the market is still in full swing. I don't think I'm gonna be taking any more trades, so just sat back down at my trading station. I figured I'd go ahead and get this review out the way, and if I do take any more trades, then I'll be redoing this evening. So let's go ahead and get into it. We starting the month off with a nice base hit day for March. We took 3 trades today. All 3 of those trades were green, and we actually took small sizing on these. Usually I'm taking 2 contract trades. Each of these trades today I took 1 contract on. Trying to go into the month a little slow considering the last couple of days of February. So we took 3 trades, like I said, each of them being 1 call, or not 1 call, but 1 contract, because we did not play calls today. We played puts on everything. But let's go ahead, get Trader View pulled up, and we will take a peek at that real quick. So had a closed P&L of 120 on the day, so that was good. First trade that we took was Target TGT. This one here was on the watch list actually to go higher. I had planned on doing calls on it, and then I looked at the daily and I'm like, wow, this thing is super gapping, and was gapping so much that it turned, and we took advantage of that turn and purchased a put. We traded that one down and got out of it as it was coming into some resistance. It had actually hit resistance a couple of times, and I'm hoping that that is not too loud in you all's ears. My computer is wanting to give updates right now, but that came into an area of resistance, so we ended up getting out of that trade. Next trade that we took was AMD. That was pretty much a set it and forget it trade. And then we got into Apple. And Apple was another one that was coming into an area of resistance. And we got out of that one as opposed to letting it come back up. Thought being, get out of it, take the profit, and if we see it break the level, we could find another pattern and get back in it. So that was the thought process today, and it seemed to have worked. So let's go ahead, get the charts pulled up, and usually the chart is dead because I'm usually doing these reviews while the market is closed, but as we can see, market is still full-fledged. One of the ones I did want to look at, we'll come back, take a look at it real quick. Let's see. I'm gonna go to Trader View. I just pulled up. This was the AMD trade. So if you look at this AMD, we bought the put at 214, got out of it at 272, and we see that this is March 18, 110 put. And also I had bought a couple of these and held overnight in my other account. And I got out of those a little earlier than I got out of this one. But let's take a look now at that put. So AMD 318, 110. That put right now is trading for $4.20. So $4.20. It is up $206 above what I paid for it this morning. So that just tells you the potential that these contracts have and the small amount that it takes to get into them. And that's why I think this strategy is perfect for small accounts, because you don't need a lot of money to see a substantial gain on your investment. And we see here, delta is 36. So that's basically saying for every dollar that it goes down, you'll make $36. So this thing has to be down a good $10 today. Let's see. Let's go up. AMD, look at that right there. It is down $8.50. So that's how it's real quick and easy to do the math just based on delta. I had someone ask me today in the chat room, like, what strike price and what expiration are you buying your contracts in? And for me, I pay no attention to this. I pay no attention to when it's going to expire or the strike price. I pay attention to the delta, which is going to tell me how much I'm going to make on every dollar or how much I'll lose on every dollar. And then I pay attention to the spread. This tells me how much slippage I'm going to get. Because there was, let me pull up SE real quick. Look at this thing. This made beautiful moves right here in this area. This is when I was looking at it. This made beautiful moves right here. But, and I deleted the contracts because I had no desire to get in it. But I'm going to go ahead. I'm going to pull up the option chain real quick. So this is the option chain. I go ahead, change this to LMD. It's just here, I don't want to see all of that other stuff when I'm looking at the contracts. I want to see open interest. And these are thin. These are thin. I want to see the delta and I want to see the spread. So see, this spread is 35 cents. So that's $35 between the bid and the ask. So if I try to get out of this quick, I have to get out in the spread somewhere. And if I'm at target, then that just means that the ask is at target. The bid is not going to be at target. So I don't like and look at that. It's went to $65 spread. That's about where it was at when I was trying to get in these trades. That's more realistic. We'll come over here to the put side, which are the ones that I would have been wanting to go with. So probably would have been looking at this one here because it has the most open interest. So I got 2,000 open contracts, a delta of 36, which is good. Spread $40. That's a no-go. Another one, Home Depot. Let's look at HD. HD, I wanted to go with calls. And let's take a look at the morning. Look at how this thing just grinded up all morning. Good entry right there. Breaking right here. Another good entry. Decent entry here, knowing that we're going to hit this resistance, which you see is exactly what it did. But now let's look at the option chain. And we're looking at calls this time. So probably would have went with this one because it has more open interest, 0.30, so, or 0.29, so $29 for each dollar. But the spread is 0.3, so $30 spread. So this can hit my target, and the ask could be at the target, which is where I'm going to be trying to get out at. But the bids will be $30 below that. So I need a bigger move in order to hit my target. So that's why I don't concern myself with expiration, or strike. I'm looking at open interest, and I'll look at open interest before it hits my watch list. So that's why I don't have open interest on here. But I still like to see what the delta is, because see, sometimes I'll put two different puts on there. So like for the SPY, I got this one at 0.23 and this one at 0.34. So that's why I like to know what the delta is. So I like to know what I'm going to be making for every dollar that it moves. And you could say it the same way. So every 50 cents, that's going to make $17. So if the SPY moves 50 cents, I'll make $17 on that one. I buy two of them on a 50-cent move. Now I'll make the $34. So that's the way I do that. But just a little explanation on how I choose my contracts and why certain stocks I can't trade even when they show good moves like this. Here's another one that came down, tested VWAP, came back up, tested it. It broke that high. Excellent entry point. Excellent entry point. And look what it did. $3 move. That's a $3 move. So if this was at a 0.4 contract, that's $160 in 2 candles. So in 4 minutes, you up, what I said, $3? Yeah. So $3, you're up $120 if it was a 0.4 delta. But the spread would kind of get me out of wanting to take that trade, because my first target is going to be right here. That's going to be my first target. So let's see. That's 319.71. First target is 320.71. So it has enough room to get $1 out of it. So that's $40 if it was at a 0.4 delta. That's a $40 move. Again, 2 contracts, that would be $80 in that move. And then I wouldn't get out right there unless I did have my hard target in, but then we do have room. And that's the good thing with this is, in a small account, you do 1 or 2 contracts. But if you have a big account and your risk is more, then you scale up and now you buy 4 contracts or you buy 5 contracts, and then you can sell 2 contracts at your first target. Maybe move your stop up to break even, and then you let those additional contracts kind of ride up. My problem has been, if I buy 1 or 2 contracts, I'll try to squeeze this out and then it'll turn on me, and I never did capture any profit. So that's why, like I said today on, what was that, Apple, I pretty much just got in the trade, I set my brackets, and that was it. We didn't need to do anything else with that. But we'll go ahead, start reviewing. I'll get this first one pulled up, which was Target. And like I said, Target initially was on the watch list because it was gapping up. And let's look at this thing. Upper right chart. Target opened way up here. So it gapped over all of this. And as we see now, it's just selling off. There is no bottoming tail. Maybe just a tiny little wee bit bottoming tail on the daily. But once this thing rolled over on market open, so this right here was market open, and we see it just tanked out. So let's go ahead. We'll see where we got in on this trade, and we'll see how we managed it, see how we got out of it. So this one here, we got in at 940, getting in as it's breaking this area right here. So it's breaking that area with just this little bit of room right there. And let's see when we got out. So we got in at 9:40. We got out at 10:16. So we let this one play for a good little bit. Where's 10:16? So we were getting out there. So if we look at this, this came down, tested this area, didn't break through, pushed back up to VWAP, came back down again. On this one, stop would have been right around here, but didn't have a hard stop in the system. And once we saw that this failed the VWAP, we just let it continue to play out. And we see when it came back down here to test this area again, and it failed and started going back up, or I should say it held going to the high side. It did hold going to the high side. I got out of it here and we made $35 on this trade. Would have been nice to see it break down, but again, once it held, that was it. We could have stayed in it and let it come back up, and we see it just kept chopping around and chopping around, and would have ended up having to take that stop up here once we got above this area. But let's take a look and see what it's done. So here it is, what, 120, and it is finally breaking this area here. But this here was just taking the base hit, is what I like to call it. Let's just take the base hit. We didn't get target, but nice solid trade for what we were in it. Now we paid $335 for this contract, and we sold it for $370. So $35. Again, had I bought two contracts, would have made $70, but wanted to start the month off a little slower, get our footing back under us, get a little footing. And was that the best entry? Not at all. Somewhat could have got there for a late 3-bar play. It wasn't the first or second move with this candle here, but that still was a nice wide range candle down. Nice little doji candle here. So this candle here would have been a nice 3-bar play breakdown. But we did get in on the next candle, just about in the area where we should have got in off of this candle. And again, with resistance right there, came right down to resistance, came back up to VWAP and an area here that we had marked on the chart. Came back down, tested it. Let's get out. Let's get out of that trade. Thought, and I think I had said it in the chat, if it breaks and holds, I can always get back in. And we see it didn't break until way over here. So good solid trade. Good solid trade. I'm happy with that trade. Happy with the management on it. Next trade that we took was AMD. AMD is one of the stocks I just keep on my watch list. It's almost like the SPY and the Qs. It just stays on my list every day now. But this one here, we got in at 1038. Let's see, where's 1038? So we're getting in at the right candle. Yep, 1030. So almost 1039. So we're getting in right here. A little early. Let's look at it on the 2-minute. 2-minute might tell a different story. Still got this bottom and tail here. So this one here would have been a better entry coming off of this candle as it's breaking the low of that candle. So we did get in here a little early, but it was testing the VWAP and holding. as it broke that candle. So like I said, got in a little early. We set our stop, would have been up here, and then we got out of this one at 10:58. Up too far. 10:58. So getting out down here, bottom of the move, so that's good. And that one there, we got out for a $58 gain on one contract. So again, two contracts, we would have spent $428 on the two contracts, and we would have made $100 on that. So, and then we do see, like I said, this was the one that we just looked at, the put right now. It's at $4.36. So it's still moving, and we see it's still moving down. And we did have other areas where we could have got in right here. We do know that we're going to hit this resistance here though. So getting in on this one, you want to be looking at your volume. See the volume increase higher than what this volume has been. So this would tell us that there's sellers pushing this down, and it's just grinding it down. What, 2 minutes ago, it was still setting the low of the day. So missed some opportunities, but again, we're at our goal of the day in this account. So another fairly solid trade here. Like I say, we did get in a little early, maybe 2 minutes early. Should have been getting in right there. But solid trade overall. And then our last trade of the day was Apple. So let's take a look at Apple. And we got in this one at 1040. Where's 1040 at? Oh, 1040 is over here. So let's see what we were looking at. Another one. No real confirmation that this is going to hold the VWAP, other than we set high of the day there. It came down to VWAP, pulled back. Now it's setting a lower high. So if this one came down, it should have pushed back up. It should have been pushing up to go higher, but it sets a lower high, pushes down through the VWAP, and we get in as it's pushing down through it. So again, this one didn't really give us any solid confirmation, and we got out of this one 5 minutes later, getting out right there, 10:45 and 35 seconds. So we see we're watching this one now. So this is not like AMD where we just set it and forget it. This was one where we were watching these key levels that we got marked on the chart. So this one, we're going to get in here. We'll have our stop up above VWAP. Again, trade don't work, take the stop, but we see it worked. Push down to this area of what is resistance for us, because we're trying to go low, and we got out as it bounced and started going back up again. And this one here made $27 on one contract. So again, had we took our standard two contracts, we would have made $50 on this trade right here. But this one did come down, came back up, testing the VWAP, testing that area, came back down. So this is trapped in between the VWAP and this area here. And look at what it did. It just kept bouncing. And then all you doing is wait until it breaks out of one of those sides if you want to get back in. So with this one here, it broke straight through the bottom and just kept going. Just kept going. And look at it. It's still going. And just like AMD, 6 minutes ago, it set the low of the day. So let's take a look at this one and see what this put is doing. So this is March 18, 165 put. Let's come over here to Apple. And did we remove it? Because I don't see it. So let's go here to trade. And I'll show you how I add them. So 165, right click, add to watch list puts. Oh, it's on there. This is just not sorted. There it is. So it was there the whole time. It just didn't have this down far enough, and I don't have this sorted as the garbage man drives by late in the afternoon. But let's take a look. So we paid $4.15 for that put. We got out at $4.42. And right now it's at $5.55. So we would be up $100 had we been still holding on to that one. This one here, we see the delta is 5.5. So that's why as that delta goes up, cost of your contracts usually will go up. But delta 55. So every dollar we're gonna make $55. And then the spread 0.5, it was just saying 10 cents a minute ago. Those are good. We could work with that. The SPY is always going to be your best bet on the spread. The SPY and the Q. These here never go more than 5 cents. So you're never going to catch more than $5 of slippage. And that's something that's easily able to work with. Here we see these are 10-cent spreads. $10, still not bad. 27, nah, that's $27 that you risking. And if you're only trying to make 25 on a contract or 50 on a contract, you're giving up a lot with that spread. Giving up quite a bit. We come up here to this target call. $38 spread. That is crazy. Even the one that we took, it had a $25 spread on it. And I think it was another video. I can't remember what the stock was. I did say sometimes, and it might have been Home Depot. Sometimes the pattern is so good. The pattern might look so good that you can kind of take a chance with that spread, but I really don't like to. I like to keep that spread single digits. So that's why if you look, these two stick out like a sore thumb. So if I'm looking at the chart, let's say for instance, Target right now. If I'm looking at Target, unless the pattern is just great, I'm really not going to take that spread. So like coming up here, getting in right here, no way, no confirmation. There's nothing showing me that this is going to make this move. This right here, though, is good. Actually, it's the next one. Look at how small this candle is. And it's a bottom and tail with major volume. That right there tells me that this move is done. And then we look and we see what happened. The next one, another bottom and tail, not quite as much volume, but look at what it's doing now. It's reversed. We see that in that candle right there, this bottom and tail. Not quite half of this candle, maybe a little bigger than half, but look at the volume. Nice bottom and tail, so it's a lot of buyers that came and pushed this all the way back up. Next candle, same thing. Sellers came in, pushed this down. The buyers came and pushed it right back up. And then we see the next 5 candles have been green candles. But look at where it's coming up to. It's coming right up to this area that we have marked on the chart. And that's why it's important to mark the charts, so that you know won't say that you know, because sometimes like this here, it busted through it. Even though it did come here, they put up a little small fight, little consolidation, and then it busted through. But look at what it's doing now. It came right up to this area of resistance, and it's rejecting it back down. We'll watch this candle form real quick, and then I'm going to be wrapping this one up. Yeah, be wrapping it up. It's almost 2 o'clock. I doubt I will take any other trades for the day. I don't want to give back any profit on this first of the month. But yeah, we see this candle is forming. Look at how small that candle is, and look at the volume. This candle is still forming. We still have about 45 minutes left in it. Volume is just now coming up to catch it. But look at the size difference. And see, if buyers could step in, we'll see this candle start pushing back up. And that's what leaves that bottoming tail. But right now, sellers are pushing that back down. Nope, look, buyers are stepping back in. They're trying to. So it's a battle. It is a battle when it comes to the market. You got the bulls and the bears. It's just who's going to have more strength at any one particular time. And right now it looks like the bears are winning. Buyers came in a little bit. So look like the bears are winning it. Let's see what this next one does. Look at it. Bears step right back in. So that is reading the chart. That is putting your areas of support and resistance. Someone had asked in the group today what indicators different people use on the charts. I like the VWAP and I like the 50-day. Those are the two. So this is way above the 50-day. Let's look at the SPY real quick, and then we will call it quits. So we see on the SPY came right down to the 50, back up to VWAP, back down to 50. It broke it, came down to this area that we had marked, came back up to the VWAP, tested, broke that, and broke this, and then broke down. Came right down to another area. And these areas I just leave on the chart daily. I don't remove them because they'll still be valid the next day because it's what the market makers are using. But we see came right back up to this area. So that is it. Go ahead and end this one. I appreciate you sticking around. If you're still watching, please give this video a like. That way it'll help me out in the YouTube streets as far as hitting the algorithms. Also, if you're not subscribed, please subscribe. I make these videos and do these reviews daily. That way I could better prepare myself for the next day in the market. And maybe you can learn something from my reviews. So like I said, definitely think about subbing. I'm gonna show my thumbnail watch list real quick. Give me 1 sec. All right, I figured I'd post this just for some people that are in the chat group that I sit in. This sits on the screen all to itself, and these two blue ones here are my market chart. So that's the Qs, that's the SPY. And based on what the stock is based on what these might be doing. So we see Home Depot is a New York Stock Exchange stock. So it's going to move, usually if it's moving in tandem, it's going to move with the SPY. And then we got AMD, which is a NASDAQ stock. It's going to move in tandem with the QQQs if it's moving in tandem. So we see AMD is on a page of its own. It's doing what it wants to do right now. Home Depot, pretty much the same. It's doing what it wants to do. It's just moving on its own page, because as the market was selling off, Home Depot just been holding strong, trading right around the VWAP. If you can see that gold. If you can see the gold line right here, it's just trading right around VWAP. So that's how I do it. I'll put my ideas over here in the mornings for what I'm gonna be watching, and then these two right here always stay here. And then as I'm trading, I'm looking at the stock that I'm trading. So in this case, I will be looking at the NASDAQ, or not the NASDAQ. I'd be looking at AMD, and then I would glance over at the QQQs and just get an idea. So AMD trading down. It's in a downtrend, while the Qs chopping. So my thought is I'm gonna continue to play this down, and if the Qs drop, it's gonna intensify the drop on this. So if this is trading down, the Qs chopping, whenever the Qs decide to drop like it's doing right now, like it's coming down, it's going to usually intensify what that one is doing. And let's look at AMD. AMD was leaving a little bottoming tail, and there AMD doesn't have much volume in it right now. That's why we're seeing these little small candles. But look at the little tiny bottoming tail, and look at the Qs. It's leaving a bottoming tail. So that's how I do that. I try to use multiple time frame analysis. So on my trading station, where I'm getting in and out of my trades, I have multiple charts set up. And then I'm also looking at the market to see what the market sentiment is. But I know I probably done said that about 3 times now. I'm gonna wrap this one up, and we'll see you back here tomorrow. Peace.